Good morning. Good morning, good morning, good morning, good morning, good morning, good morning, good morning. Yo. Often imitated, never replicated. Who could have predicted this? This movement in here barely gave you a pocket. So it's strong attempts to reverse this in the only real area that it could. Now, this is all predicated upon if we're going to bounce off, two things need to happen. And this was a major warning sign yesterday. This bearish candle failed to make any sort of swing or valid high, leading to higher prices. But what did it do? It created a lot of people getting trapped, which then traded sideways. Didn't squeeze them yet. But it traded sideways after tapping into this zone. That failure to tap in here and leave convincingly, by convincingly I mean a valid high and gone, right? And gone means that this movement to the bearish side wasn't going to be on a higher time frame. Now, what ended up happening was you have this here, right? Valid high here after creating a valid low internally. You would expect this. So this area, this 481, was the last line in the sand, in my opinion, for the bears. This needed to do something like this and then die. Otherwise, what I've been talking about all week is finally coming to fruition. Those weekly options are looking tasty. Now, how could we have predicted this? Price action. What's our expectations of price? When it's not doing what you think, the exact opposite is forming. We had a beautiful double top in here internally, but all that did was take liquidity. Take liquidity and do what? Tap into the prior zone. Mitigated it, and then strong reaction with an inside bar. Many attempts to sell off yesterday. Nothing. And again, I sound like a broken record for you guys, but bull bar, sweeps, fails, taps back into the origin, gone. Bull bar, sweeps, fails, taps back into the origin, gone. Bull bar, Sweeps, fails, sideways. Okay, took liquidity, bang. Very different PA than this, right? This one actually just left. It didn't even give you a retest because it wanted to wreck it later on. It's these patterns, because that's how price moves. You didn't just start doing that this week. So are we expecting a lower time frame or a higher time frame move here? If we're expecting higher time frame, sure, we might ideally get something like this. Back down in here. But as traders, we have to pivot. We have to react. You might have not found a trade in here. Fine. Cool. Hopefully you're not shorting. We have no reason to be shorting here at all. No change in order flow, nothing. Trades higher. What do we find? That's actually not even the last structural bull bar. We're still sweeping above, sweeping this candle. So I look at the lowest of this one. There goes that high. Right? The inability to make valid highs or even trade below candles that we've swept and failed tells you what kind of delivery is going on. Look at this. Look at this. Goodbye. And now what? Now the question occurs. Do we get a range after taking that daily high? That would be my expectation. But this, finally getting a little climactic after this. This is much more violent than this move. And you can bet that some people will be taking their profits here, for certain. But until it's ready, we don't hop in. Right? People will be shorting all over the place. They'll see these bear bars. Short. Stop filled. Right? If you must, you're basically drawing it from here for a pullback. But do you really want to be pulling back as soon as we've taken a daily high? Should we sell off from here? You're looking at violence. You've now got your first valid high and no structure. No structure at all until your last swing, which is all the way down here, 180 points lower. Right? In an ideal situation, if we're going to get our crystal ball out, is we get a body closure above this candle. And the next one, if we're going to pull back and clean up all of this nonsense down here, ideally the midpoint of this zone, right? But a bear bar following this and movement, what you'll get is a very violent movement back down to here. What I don't like about taking these all-time highs, even though that is the goal based off of the weekly, failure here should take this week high. We're grinding all of our weeks, grinding higher with all of our election fund stuff. Right? But regardless, it would be highly unlikely to have this candle take liquidity and then close in here or something. Right? That said, we can anticipate some sort of a pullback. At least a few legs. First thing it has to do is it has to close underneath this. And then what you might find is a trade back in and then a short, maybe. It's taking a higher time frame objective, fair enough. You got 9 minutes on this 15-minute candle. A lot can happen in then, but I would expect that we would need to see something very bearish on that for us to continue to unload. On daily time frame, the price became lethargic from January to April. January to April. You talk about this movement in here? Yep. Mm-hmm. Right? So you kind of got something like this going on. You got your failure here, fair enough. Failure here. Failed yet again above there. Traded. Couldn't take this low yet, but this candle, we failed to do anything at the high of it. Came back up here and then left. Left back down to where? This SMDR. Right? And you'll probably notice as well, that lines up pretty well. Bang. Happy feet. Happy feet. 1,200 points. Well, actually a lot more than 1,200 points. A lot more than 1,200 points. But yeah, you expect when things start tightening up, right? Like this is not tight. That's a pullback. Right? Even in here, you got your snap. You trade back in, then we left. This was a little bit different. Right? This attempt to sell off here yielded this candle, which yielded a squeeze. In general, when you see lethargic movement that tightens up, especially at the high, you're expecting some sort of reaction to the opposite side. Entirely up to you guys what you would like to do in here. Personally, I think the large energy of this move came from here. So should we pull back? I'd be looking for something similar to this from here. Hey, what's up? How you doing, Cinderella? Hopefully you're doing well, my man. Supporting this theory of trading all the way back down into here. We're bouncing a little bit off of the 23. We have nothing part of structure though, so you would need to see a specific signature if we're going to do anything from this area. Right? I wouldn't take, if it starts unloading, I wouldn't take a falling knife into it, regardless of its significance. If you choose to, go for it. You legends. My goodness. How long we got till your guys' election for you Americans? When is election day? Gives me Canada as if anybody cares about that. November 5th, huh? I'm so embarrassed by the Canadian politics. I don't even want to even look into it further. Less than 2 weeks. Less than 2 weeks. November 5th, November 5th. Yeah, but at least in the US it's kind of entertaining. You know? Like, yeah, you got a lot of emotionally charged stuff going on either side. But it's wildly entertaining. In Canada, it's like you got a circus, or you have just flat out nonsense, right? I'd take the circus over that any day. So this is interesting. If we do enter a range here, what we got is you're defending the midpoint. Where'd that trade to? Right to the 23.6. Likely comes back down if you see a sweep of these lows here, these lower ones. And we fail. Now the caution would obviously be the second distribution if this is violent. Right? You got that low 54. There goes that flat bottom. Potentially another scalp back into the range. Right? For those of you guys that like to play aggressively, but I'm sitting on my hands right now. Right? If you're taking any longs from here, you're essentially expecting the range to continue and not to fall back. Or you're looking at this going, if we're going to trade back down to here, we should go higher. That's not really supported by this so far. If this closes bearish, then I think you have a credible top. If it closes bullish, then I think we go higher later on. The 5 minute certainly supports that idea. Right? I don't really like that for a stab and then failure. Right? And you've already made your 10 points from that flat bottom. Right back up to where? Your area that had all the volume. Right? But what's more likely is you trade back up to here. That open of 69. Even if you are going to fail, you would likely have to trade up to there. Right? You got some internal lower time frame swings. So again, multi-time frame analysis, right? You've got your higher time frame move to your objective. You've now started to get swings. Oh, that's actually not a swing. Yeah, this is still one current swing wherever that ends up. Should this movement be lethargic, you know that it's not higher time frame. You know that it's lower time frame moving down to an objective. That objective could be here. Right? It could stop here. It could trade all the way back down to this, find a speed bump there. It could actually unload, right? I wouldn't expect lethargic movement to really take all of this. Right? But regardless of that, the vast majority of people's trading problems, I think, come from either A, trading against the objective, or B, you're trading against the higher time frame. Because if you're trading with trend, you're probably profitable in general. If only for days like today. Like, you could have gone long literally anywhere in the worst possible spots other than here. Please don't go long here after you take a daily high. But other than that, literally other than that, long off this bear bar, right? That opened at 610. Your low was 603.7. That's like 6 points of drawdown, right? Even if you're long here at 54, where did that go down to? 44.75, 9 points. Hopefully you didn't go long there. That's probably the only spot that you would have gotten wrecked. Maybe here too, I suppose. But like long here with Patty. Long here. Like long there, there. Like anywhere and you're making money. Right? And what are you doing now? That doesn't necessarily mean you want to be looking bearish, but you've got a valid swing from that high. You've now got a valid swing in here. We usually look at failure to determine if the probability of this lethargic movement being done is done, but given that we've only had one attempt to reverse this trend, you could argue two, we would need at minimum to trade up to here and then close above and then break this high by extension, which I think happens if we trade all the way back up here and have strength, right? So in this instance, yes, this is a scalp. We took liquidity, cool, but I still expect lower prices. Now, the caveat to that is if we've actually entered a range here. If we've actually entered a range here. Right? Essentially, how you determine that is if you've got valid highs and valid lows that aren't breaking structure. We don't have that on the bullish side. We're within this candle's range right now. So if you're going long and you're losing money in this, the reason is because you're trading against the current objective, which is to retrace. And then what you're looking at is that it's, because it's a lower time frame retracement, there's two ways of making money with it. You're either selling the pushes into the prior zone, right? So shorting, targeting the lows, shorting, targeting the lows. Or if you're expecting lethargic movement to continue or a range, you're longing underneath for the push back into the prior zone. You're longing underneath for the push back into prior zone. Some days are more clear than others. How easy for me to say in hindsight. Personally, I don't look at any of the time or any of that stuff. I think that certain times have certain, whether it's algorithmic or it's just market personality at this point or whatever. I think that typically around 10:30 something happens. Almost every day. Almost every day. But I love how zoned in everybody is. How are we doing, lads? This is a nice breath of fresh air compared to this week. Now you have your intermediate failure here. You got to wonder if we're actually going to wreck these. We'll find out in a few minutes. But right now, even if we got rid of all of this, all the other doodles, right? You've got, is that a valid swing? 80-50? Yeah, it was. How about that? Last line of defense, but look out. Look out, look out, look out. And I strongly believe for this exact reason, probably from there, that understanding failure and the context of the failure is one of the best skills you can learn as a trader. Right? And what that encompasses is pretty much everything, you know? Like, we just looked at the daily. Yeah. 3, really. This being liquidity. That low was 45. That low was actually 44.75. So we took all the liquidity from this area here. Usually flat bottoms are a good pocket as well. And there goes your high day. Right? So you could even look at this one, which I think is fair. And that's something you guys have to ask yourself as well. If we're trading down, are we expected to trade down or not? Yes. Why? We just formed a valid swing. We defended it, right? We traded down. We traded back up into this. We're expecting a little lower, right? And then because this was lethargic, we were expecting higher prices. And now we're looking for failure, right? We were expecting the third push because of this candle. And that third push ended up failing. And like M1 says, beautiful double bottom here. But you had one scalp back into the range, right? That ended up taking liquidity again, giving you another scalp back into the range. Tapping into this imbalance. Failing to close above bearish bars. And then yet another failure. And then what you do is you monitor. Say you're long here and you get this candle. Well, we're quite happy with that. Right? We've got a double bottom going on here. So we might target this high. And instead we get this. Right? We want to see higher time, this movement lead to a higher time frame push. If you don't get this higher time frame push, we go lower. It's that simple, right? This is price expectations. I think we have a candlestick video number 1 about that. It's free for everybody. Right? You're expecting this. Right? So this was a little telling. Even that 5-minute was a little telling as well. We took where? The bottom. Flat bottom there. Which you'll find being very good liquidity targets. 15 minutes showed no signs of being a credible top. plus lethargic movement, you're starting to build your narrative. You could consider this being your lower time frame SMDR. But I think is fair. I wouldn't really suggest we built a higher time frame one. Maybe this here that we just went on a rocket ship from, that consolidation. I struggle to actually use this. I want a genuine attempt to sell off, not sideways. And by genuine attempt, I mean that we actually trade below candles, not just kind of internal sideways pre-A. Let's get rid of this now. No, they did close up there. It's a little tricksy on the 15-minute, but I would leave it like that. Right. Eyes are on this level here, 667, if. But I think we're playing with a little bit of fire, expecting massive continuations after swings. Although you might get a third one. You might get a third one. Right? Essentially, you want to see strong buying in here and then take out those early buyers if this is going to be an area of interest. But again, this being at the top of the range, around a daily high, if this holds, then we go up pretty quick. Right, that's like, what, 40 points? Plus whatever it ends up being. Woo. Careful, these guys are probably going to get liquidated. It might run from here, in fairness. You have a nice little sweep. The tell will be what happens at the top of this candle, if we even get there. How are we doing today, lads? This is important. If we blast through, then we definitely take those highs. If we get held up, then it's a little unclear. Not quite the area we wanted, of course, but that was a beautiful trigger. Tap back in, respected. Your expectations definitely taking the high now, 707. Not financial advice, but you know what I mean. In general, when I see climactic action into a prior zone, you kind of want them to accumulate people. This is more of a sign for people to take profits on their shorts than anything else. This will be interesting if they can defend this candle. If we can't, then we drop lower below this. Or they could be building an SNDR. Who knows? Who knows? Right? My expectation is still that high. This is just sideways. So it might swipe it and come down. Or we get our movement into here. I think if she's going to go, she should go now. Here we go. Important stuff. 45 seconds too. Lots of time if they've trapped everybody. Beautiful. And then that probably comes down. Although after a little while. It might squeeze given that we've just built something. But essentially, if we run up and then fail below this area that we're creating right now, then you're looking for that tap back in, and then you might get a movement out of this area still, right? But that would essentially do that, and then you'd have your drop probably underneath this protected low. Everybody clear with all the doodlings? An artist I am not. Right? And the idea is that if we're building an SNDR here, we're essentially failing to create a valid high, which I think is important. Although there's a lot of selling pressure coming in here. It's not generating anything, but there's a lot of selling pressure. Right? So it's either going to take this high or you're going to get a violent movement underneath this low. There's no real consolidation leads to expansion. Yes, it doesn't take a genius to figure out that we're either blasting up or blasting down from this, right? And it's certainly concerning with multiple bear bars coming in now. But again, all this sell pressure means nothing if they can't crack below 86.50. That doesn't necessarily mean they're wrong, but they are early. And they don't care about being underwater by 20 or 40 or 50 or 100 points. But I certainly don't trade that way. So one of the challenges for us as traders typically is we need to be right, but we also need to be right at the right time. Especially if you're scalping. Essentially if you're scalping. Then you might think, well, obviously we're going higher. Look how bullish we are. Right? But what you need to take into account really is the guy on the other side of the desk. Right? Because they see something too. Mm-mm-mm. 20 seconds for recovery, or what do we do? It's going to be nasty if they do it. Nasty if they do it. What do you do? What do you do? I mean, this is a tap back in, so it's not, they're making it unclear for a very specific reason, right? You still have this midpoint here. I still do think we go higher, but the alternative now is if we drop into here and move. There's still a probability that they close it up here and then run it, but if it's unclear, I stay out personally. Lots of scalps to be made though. This is one of those unclear things where you finally got your body closure underneath that, but inside this candle. Right? I think ideally something in here for a long would be higher probability. I think that in here, ideally what we wanted to see was this candle move. Right? For the same reason that we were looking at this. We wanted this to be finished business, failure, and gone. Instead, we got that nonsense, which is probably because of this candle. Here comes our low here, 72. And there's your midpoint. Now this is violent, right? So test your order flow skills, even if you're not taking a long in here. Determine if or when you would. And at minimum, you're looking for a trade back into this, right? Which would coincide with this high, 87.25. But what's our expectation of PA? We created a valid eye. We've now created another swing down. Similar to here, we got two swings. This is our second. Go on, you good thing. Your conservative target would have been this high. You could argue as well the top of this. Personally, given this high, I would look for 707.25, especially given that we have a higher time frame delivery. The trade-off for that is now you're following your lows up. Right? And you're expecting this to be something similar to that. Right? Chop, chop, chop. Not doing what we wanted in terms of here. Right? Had to go lower. But lethargic, climactic, gone. Right? So, both conservative targets hit now. Be interesting to see what this does. I think that we do look for this high here, personally. The question is, will they give it to us cleanly, or what's going to go on? If this ends up being a bear bar that cannot break below the prior bull bar, this one, then we know we're delivering on a higher time frame. Otherwise, we also have to take what into account? This prior zone that we're now trading back into. People are shorting the retest for further downward movement. Very possibly could come into this pocket. Very possibly. What's nice is that people that are seeing both sides of this are making money. Now, if you're short from this zone or this consolidation, what you don't want to see is defense of this. Similarly to what we were looking at in here. Now, this ended up working out after this failure. But on strong price movement, especially when it's delivered by a higher time frame, you typically don't want to see these candles respected. Because if you're short, you want to see this either deliver on a higher time frame, similar to what this did, or you want this to essentially close down here, right? Creating another swing, similar to what happened in here. Which is one of the reasons that I suggest following lows up to catch parabolic moves, right? You got a low, a low, a low, a low, a low. You could even argue in here, you took it off. If you would have been holding for this one, that's fair. I think that once this failed to go higher, that was a telltale sign we were coming for this low. And now you're back down into this. Where's the liquidity? It's right here. Low probability event that we stop here and run. But I think we take this low now, 63. There it goes. Right into your pocket. You could argue the order flow from this. And now what's interesting is if we take this or not. I don't like that possibility because of this high. Right? I don't like that for a high, a credible one. Personally. We've still got all our stuff all the way back down here. Right? So we can't get married to our entry. That delivered beautifully. 2 targets, actually. It didn't quite take the high, which is the expectation. When you trade back into price, you would expect the bullish trend to continue. Beautiful little movement out of the pocket. We now see what happens with this imbalance. But again, not everybody has to be aggressive. If you're looking for confirmation trades, that's something else. I don't actually. It's coming. It's coming. But I think like there's a lot of different stuff out there on beautiful fancy entry models, either on the you know, on 5-second time frames or 10-second time frames, or you only need this to become profitable or whatever else. But essentially what it all boils down to eventually is when to stay out of trouble, and then you have what's the market doing? Are we trending or ranging? Obviously, you know, trending, you look at, are we bullish or bearish? You kind of need to know what way the trend's moving. And then where's the market going to? And all entry models, even the fancy ones that you guys hear and see and whatever else, they don't like remove the need to know, are we bullish or bearish, or where's the market going to? Right? And if you don't believe that, consider that nobody, like the entry model for shorting here and making money, if you're able to do that consistently, that's a narrative based trade. Right? We just, like the higher time frame move down, if that fails here, we go above this high. Right? It failed, so we traded here. People shorted that and made 20 points. Maybe they're targeting this protected low. If we just put in a valid high on the 5-minute, 6250, 6250, we haven't done it yet. Haven't done it yet. Could. Certainly could, given this PA. Right? But in order to do that, we would be expecting a break and a closure below this protected low. Here it comes. Do we get our sweep, or do we fly? Got a minute left. In fairness, it's got to rally 25 points, which isn't unheard of for this type of price action, but oh, that's nasty. Right, so you have your first, your second, this one after this imbalance, and then this here. This is higher time frame delivery. You have a nice little movement out of the midpoint here. And I'm using this, by the way, because this was manipulation. I think in terms of end target, we trade back down to this. This is gross. See how important structure is? That protected low was 41.75. That closed at 41.75. That traded all the way down 21 points and failed to close there. Now you have your valid swing on your 5-minute. Your valid swing on your 5. Structure isn't broken on your 1, ideally. You could argue high intermediate time frame change in order flow. And if we get rid of all of this, then you've got your midpoint here. Let's actually draw it from the other way. midpoint here. If we get major failure, then that would really take us lower. Right? But I still expect what I have that. I suppose we could draw it from there, right? Given that it's a 5-minute high, I think that's fair. Right? If it's not clear for you, then stay out. We're looking at a minimum to trade back into this. We got that, barely. Right? Recall that these trades back into prior swings, they don't have to come here to the midpoint. They could actually sweep and fail at the other side. Or they could barely tap back in and then reject. Given that we haven't broken structure, but this is a higher time frame move, I can see this being a little bit unclear for you guys. Right? I'm personally waiting to see what happens in this area here, which I think is our end goal. If we continue higher, we might take this high or get held up in here. Again, first swing, confirmed, push back, second. Now this is a violent one, but we now have another swing in here. We'll see if we get a fourth. Or if we're done because we failed underneath that protected low. That's our sweep model. When you're expecting higher because you have a weak high, or not weak high, I consider it to be not credible. And I think a lot of people are caught short that are really wondering if they're on the wrong side or not. If you guys are green this week and you're green today, you're very sparing with your trading decisions. I personally favor higher prices if I'm honest. Although that was a nasty reaction from that. We might have to go a little bit lower. Right? If we can close above this candle, then I think we go higher, at least into here. But we're not showing an eagerness to do so, or at least right now. These days kind of, they bring back a lot of nostalgia because you kind of go, I remember when I used to do this, right? Quick long, quick short. and then I get wrecked on both sides. It's wild how these kind of days make you realize just how far you've come. And I think that's important because we tend to chase different people or different things or whatever, and we forget just that we're really competing against ourselves, aren't we? Becoming that little 1%, 2%, whatever better on a daily basis. That's wild what that can do in a year. I can't believe it's already October, man. Like, what the hell? Almost the end of it, no less. Who's waiting for lower prices here? $600s. I know some of our lads are, for sure. Not messing around in all this. It almost lulls you too, doesn't it? You've got this out of the gate, what, 491 to 703? 200 points in the first half hour. And then just this range afterwards. Who could have predicted a range? Did somebody say that earlier? I don't remember. Yeah, I suppose it is recorded, isn't it? We seem to be capped within this area, though. And I think if we can't strongly push out, especially after you get something like this, that sort of change in personality, that we either go now or we drop below that low. Right? But the market's ready, and you can tell. Ready to do something. And then what you do is you determine, is that bear bar good enough? Right? Is that really what they want to see? And part of that's the follow through with it. Right? You don't want it trading down and then trading higher. That lessens the probability that's going to be expansionary to the downside. Not quite. But choose your short very carefully. We still have not broken structure on the 1. We still have that narrative higher, which is pretty easy to forget about. Right? I still don't really like this for a credible high. That doesn't mean we can't leave it for later. But we now have to determine whether this is going to be lethargic or not. I don't really like the idea of shorting into this. Although you're seeing some wicks coming in, that's fair. Right? So again, you're looking at the lows of these candles, 60, 50. What does this one do? If we close below it, then I think we go lower. Ooh, 28 seconds. It didn't quite hit the area that I wanted for a short. Personally, I thought that we would take this high. We haven't taken any liquidity in this movement yet, so I don't think we're done to the upside. But if this candle proves me wrong there, then so be it. We'll see. We'll see, we'll see, we'll see. In general, what I look for is this liquidity was taken, we traded back in, right? We traded back up into here. If we unload without taking that, that's very interesting to me. Right? In fact, that's a little bit unclear because I am expecting higher. That said, like, just because it's unclear to me doesn't mean that we have to understand absolutely everything that's going on or that it can't do something like this. In fairness, this candle wasn't even valid. It was actually this one. Right? So we're still good to go higher, at least to take that liquidity. Right? Had this candle closed above that, I don't know what I was looking at there. We've now failed to go lower. I'm expecting higher. Don't make a fool out of me, market. Don't make a fool out of me. Yeah, it's indecisive, right? You've got the strong directional leg. Tap into the midpoint of this range. Right? We got to move out of it. I think that we come down and liquidate that eventually. Right? So I was kind of thinking of something like this where this would trade up, right? Yeah, we failed underneath this protected low, which is definitely something. But sweeping this and taking this area and then delivering lower for our final movement, I thought was pretty valid. Right? And then you've got this midpoint of that prior zone. Mind you, that's not even a midpoint now. Actually, you're kind of looking at this. What is going on here? Right? Because we didn't get a body closure underneath that. We're actually looking at this right now. And then you've got your prior swing of this here, which is all the way up top. I draw it from there. Now you can argue, because this was our last structural bear bar, we closed above here, traded back in, left, traded back in, higher prices incoming. Even without this candlestick read, we've got a little bit of structure supporting that. Yeah, I don't know what the hell that was. I think I was expecting this to close underneath, and that's when I drew it. I just never revisited that, was looking at candles. Which is dumb, obviously. Beautiful. Yeah, it's a gorgeous long. And this is how I scalp typically, right? Structural candles. If I'm expecting higher with narrative, then I'm looking for signs of failure underneath structural candles to continue the movement. Right? It's not a long here for the moon. That could end up happening. But, like, for example, this long, if you got this underneath, wherever you end up being, let's even say that you're late, and you got, say, a 10-point stop, which I use, and you're targeting 16 points, you do that 5 times with high win rate. Right? Now, again, you're seeing something different here. This is kind of urgently going. This isn't part of structure, right? This is all technically one swing here. So it could come for that low. Either way, I was looking for something to trade back in. You got lethargic movement coming up. Even though this isn't part of structure, I still look at this like 1 attempt to sell off, 2 attempts to sell off. This is our 3rd attempt to sell off, supporting the narrative of this. I think what I had with this was based off of order flow, actually, now that I'm remembering, because that's kind of embarrassing because we didn't break structure, so why would this be a prior zone? But I think what I was looking at was this being something like this, right? Trades down, breaks order flow here, trades back in, and then leaves. Which I think is fair, but more range bound than anything, I suppose. Right? Failed to put in a valid low on or high on the 15-minute. I just really like this area lower. Trying to short bit darting. Yeah, I wanted that candle. That closure was a little nasty. Right? Ideally, we got something like this, which would have allowed me to get in. No bueno. I think a lot of people are just making money trading this as a range until you get something conclusive telling you that it's not going to. And usually what I look for is that change of personality. So like major closures underneath these order flow lows. You're scalping like a legend, man. Nice trades. Right. So now you're trading back into your prior zone, leaving violently. You're at least a little concerned that we're going to go below both of these. We're looking for changes, right? And when we are breaking a range, you need 1.5 times the amount of orders to go in at these levels. That's important because when you see or you feel order flow speeding up, you can look at it and go, something's going to happen. Now, what's going to happen? Ideally, you get something pretty conclusive, where you get this like tap back in, smack, and then like this candle, for example, like failing like here or something like that, right? Instead, we're getting violent out, violent back in. Not exactly what you want to see in terms of bearish candles, but certainly a change in personality now from before. I think everybody scalping long is still making money, which is great. I'm not really sold on the long side after that push. I need something taken to really oh yeah. Nasty business. Right? So I mean, standard PAs, you've got your trade down, right? You've got this. Sorry, let's do it this way. You've got, yeah, purple standout. Why not? You've got this movement down, this movement up, that movement down, that movement up, that movement down, that movement breaks this high, trades back in to this prior zone, leaves. Trades back into the prior zone, leaves. Breaks, trades back in. We're kind of expecting this. Now, this movement, you could argue, is just mitigating this area here. Right? What I don't like about that theory is that we've already completed our objective here. So if this movement up cannot fail and go lower, then what have we got? I suppose we still have the midpoint of this up here that wasn't truly mitigated. But we could be setting up for a nice barbecue. This area that left was already traded back into, right? So we've got nothing above these highs. You could argue that was already traded into, and then we've taken liquidity here. All within this large range that we failed underneath. Right, I think it takes its time, and we might get something like this, maybe even a second run of this high if it fails to put in a new low, which it still hasn't confirmed. We need a body closure above this candle. That high was 66.25. That closure was 66.25. As they continue with their tricky ways today. And if it's not clear, stay out. Essentially, if you're playing the range, you're going long in here. You might be even staying away from the middle, which is fair. The only reason I would consider short is because of the lethargic movement. If we got something anywhere near this, I wouldn't be shorting into it. How are we doing? You guys sitting on your hands, or what's going on here? We taking, we chasing, taking losses? Are we crushing it? What's going on? Starting to tighten up as well. Be interesting if we just range for the rest of the morning as well. You got your body closure too. I'm hesitant to short above here, although that's likely going to be a very good trade. Depends entirely how it delivers. I think it'd be better to get that sweep. But I mean, like, this isn't structural, right? The only reason you would short would be the lower time frame tap back in, but now this area is mitigated, so I expect this high to go at 76. And then if we don't fail to mitigate this area here, then I really don't see any real reason that that we can't take these. Right? This is just not the way that I would want to take those highs. I would expect something, because we're going to need a higher time frame push to blow past the order flow from here, shorting down. Right? I think that the long underneath in here, inside of our pocket there, right? If I draw that from like here, right? Sweeping this consolidation out will be great, but it's likely going to be violent. I don't think we're going to get exactly what we want. It's going to be something similar to this, because they would rather die than chase price to go long in here. And I dealt with how violent that was, and the reaction from it, that we're done at that area. Yeah, I agree. Induce more shorts and then leave this high for later on. Beautiful little barbecue in there. We'll probably do some live executions next week when we get going, which I think will be kind of fun. I was planning on doing that today, but I think next week when I have my Top Step Live account going in November. We'll have some fun that way. We'll get some entertaining stuff going on. Maybe we'll do a giveaway or something fun. Is it not going to give us that liquidity? Come on now, lads. Come on now, lads. Gotta break those lows. Gotta break that low. Can I do a video on it? Yeah. Yeah. I think, actually, that's a common question that I get, is how to trade these kind of ranges. When you're expecting a range, that is. Right? So, like, you're getting valid high here, and then you got a valid low in here, and nothing's broken. Nothing's broken. That means that people will sell failure at the top, and they'll cover probably at the I usually use the 23.6. So for example, like here, if we're looking at, well, actually it would be something like this here. So anybody buying in here, stop below. They're looking to take their profits here. They enter short positions. Right? Now you've got this range. Right? Even that, I suppose, is fair. They're selling in here. And they are looking to cover in there. My goodness, that gets messy. But essentially, what you're looking for is consolidation and then manipulation. Right? So you want some sort of selling, and then you want them taken out, and then a failure. And you want that within like the top third of the range, even the top quarter. And it's safer, rather than looking at the 23, it's safer essentially to fade the extremes, right? Fade the extremes of movement and trade just back into the midpoint. Because ideally, when ranges are ready to expand, you'll get this this large shove, and then it'll trade back into the midpoint, which is mitigating the range, and then you'll get this expansionary move. Right? Right now, we're literally in like a 10-point range, which is great for those trading off the 5-second that are looking for 5-point moves. Right? You're basically looking to fade anything, or trade with your trend and objective, which is probably safer in my opinion. But yeah, short story long. I'll do a video on that for you guys. I actually have a view one's coming out. One's gonna be on how we use the pocket, but right now I'm also creating that that core content course, which essentially is going to be all the stuff in our Discord, but organized a lot better and everything else. So that's exciting. Right? So everybody that was shorting in here, that was their target, at 23.6 of the range. And I would deem the range being basically this. But you could argue as well, like something like this being the larger one. What you're looking at now is this initiative similar to that? What kind of reaction do we get from the bullish PA? Personally, I'm waiting, like I said, down in the 600 area. At the very least, I need something to take in. Now, you could argue that you've taken this low, but again, that didn't provide anything, and you're risking off of a weak low now. Which works in ranges quite often, but in general, it's not a good practice to have. You will get wrecked more often than not, especially when things start moving, risking off of weak lows. Now, what do we get here? Do we get a trade back in? Or is this it? Finally. Get down there. Ugh. I think that's a low probability event from that candle. People might look at that as a support zone, but I think narrative-wise of trading back down to here is higher probability. Personally. They're just working out all the ICT bros or something. No, they're probably in from higher, if I'm honest. I don't think anybody's shorting down here expecting this or lower. I have too much faith in humanity for that, I think. But then never underestimate. Never underestimate. Why this pocket versus the one that was responsible for the 930 move? This one probably will get confluence in here, right? I look at this as that was a spike. This is kind of your where was it? So if we look at this being your daily high at 5 or 680, and I look at this from a sort of a 5-minute standpoint, I don't really see an SNDR in here. I don't see an SNDR in here. And then it broke here. So this was kind of the area of consolidation prior to that, right? But if I look down here, this is a little bit more prevalent, right? So when I'm looking at SNDRs, that's typically where I draw my pockets from. And I need to see like a valid wick on both sides in order to look at it. Like I don't really like this here. I don't really see that as like a major attempt to kind of go lower. So could you argue this? Yeah, I think you could. I think we go underneath it if that's the case. But if I'm drawing it from the SNDRs, I typically go from the area of consolidation there. And you'll find that that works a little bit better. Right, so if I go from yesterday, right, not really liking that. I like this here. So if I draw it from there, oops, obviously not that way. Shaboom. Right? Versus if I was drawing it from here, then I wouldn't have grabbed anything actually, because that's not where it wants to go from. If that makes sense. So good reaction from the attempt of trading up to this. We actually traded the open, did we? Not quite. 654, 653.50, two points or 2 ticks. Yeah, it's my pleasure, man. Hopefully that answered and helps. And quite honestly, quite often what you'll see is you'll get these movements, especially ones that tap into key areas of interest. And this provides some intermediate time frame inducement. That really generates nothing. Like we've kind of confirmed now that we're not making a new high. Right? Just kind of broke that low, traded back in, and now we've left. Right? So this is effectively weak. You could argue we finally got our body closure underneath this protected low, but given that we were in a range-bound environment, you'll notice that's not even on my chart anymore. We've already dealt with this trade back in. you'll notice that nothing's been swept here. I didn't get my movement into here for this movement down. But narrative-wise, I'm not unhappy with that at all. I'm not unhappy with that at all. That is what it is, right? And then the way to get involved in these when you don't get your sweep. So there's actually a few things that I think are really important in here. And I'm kind of droning on and on and on. Hopefully you guys are in this short and you're not trying to fight it long. But when you're trying to look at this movement and you're sort of forecasting how you expect price to go, you've kind of got these fractal nature of price. But first and foremost, you need something taken. That avoids you getting involved short in here expecting lower or a decent move. You might have taken a scalp in there, I suppose, but failing above this high, even if you didn't take it, this is your expectation, right? So we trade above there, we get our movement back in. This is your change in order flow on your 1 minute chart. And then you see the fractal nature of price do the exact same thing here. Sideways, manipulation, breaks the low that put it in on a lower time frame. Does what? Trades back in, leaves, right? Trades up, trades down, breaks the low that put it in, trades back up, leaves. Oops. And as if that didn't do enough, what else have you got? Right? Trades up, trades sideways, breaks, trades back in, leaves. Every time frame, all at the same time. All at the same time. And then you give interviews for prop firms, and they're saying you trade in hindsight. But imagine fighting this entire movement long after you've got your change in order flow. Sure, you could have made a few points there, I suppose. But you have to understand what your objective is. And when you understand what your objective is, whether you're able to get involved or not, that's a huge, huge benefit to your trading. Are we retracing or are we on a higher time frame move? What's our expectations of what happened here if we're going to go higher? Right? That ended up dumping down, trading back in, and then leaving. So if you're fighting short in here, you're on the right side, but you have to understand what your objective is. This has to retrace to go lower because they're not shorting here. Nor should we. They're not buying here. Nor should we. Hell, they're not even buying in here. Well, they could be buying a little bit. They don't care if it moves another 100 points or down, right? You'll notice this isn't part of structure. None of this was actually. This is a higher time frame movement down. You have one attempt to reverse the trend. But that's it. This is a slow grind as this candle does what it needs to do. You'll likely see it close above 2075. Just cause. And if I don't get something resembling this, then I'm not involved. Personally, I think that this high, this is not how I'd want a high to be formed, but we've broken order flow, so it's fair. The danger, obviously, is we just blast through this and trade back down into here. But the expectation of this area would certainly be to trade back up into here, yeah. Yep. Right, so it's failure to trade back down lower. Right, you could argue taking a short in here for this movement, or at least these lows, which you're seeing some profit taking on now. As they should, you're in a range. It'd be silly to not at least de-risk some for the possibility. But you'll find everybody that's looking for confirmation longs and whatnot, even with a valid closure above that last structural bear bar here. Well, you could even argue it was that one, actually. Obviously less clear with this kind of, with these kind of wicks and whatnot, but don't fight it long until you have your objective hit. If you think your objective is that low, and that's what you're putting your money on, go for it. Then your objective is then to figure out what exactly you need to see at a price to support or reject that. I'm getting a nice movement away from that low now. I just don't like this. What you could argue is just trading back into here after we've broken above. That's valid. For me, I want something down here or no bueno. Yeah, you certainly could. Right? If you're looking at this being a higher time frame move, then you probably look at the 5 minute to see if you get something conclusive. Right? What you're seeing right now, at least so far, is an unconfirmed failure underneath this low. You're getting a nice movement out, but you'd want a closure above that one if that's your case and you're trading off the 5 minute chart. If you're trading off the seconds, you probably saw something else. Right? If we drop down even to a 15-second chart, you've now got like this, right, which is now traded above, and now you're trading back in, and you're just playing these up until eventually it's not going to work. Right? But in the meantime, so you take one loss or something in here, or you only trade the first two, which I would advise on, right? We don't want to be taking number 3 or 4 or 5. Your probability lessens in that case, right? But then, if you're doing that, then you're looking at whereabouts we should trade to. Where's our liquidity? Right? You could argue this high here. Right? You could argue we've now just broken out of this zone, so now we have to mitigate from here to here. In which case, we've just tapped into that. So when you learn price structure, what ends up happening is you got some analysis paralysis because you're starting to see everything, which is frustrating and terrifying. But it's actually like a really good place to be because it means you're right on the edge of a breakthrough. Now all you have to do is refine what exactly is the key piece of information. So for me, the key piece of information is that we have a high that I don't believe is credible. We're in retracement mode, right? And this is higher time frame delivering down. So I expect this 5-minute candle to close underneath 43.75. You've got 1 minute. And that supports the theory of trading down into this area, which I'm expecting to be violent. Hopefully not too violent that I can't get involved. But we'll see. This is kind of where MTA comes in too, which is a little tricky because you've got your 1 minute failing here, but you're expecting your 5 to close underneath this. Which one's going to give? We'll go for another 10 minutes. I think I've droned on enough for you guys for one morning. Hopefully you guys were able to bank quite a bit in this, at least so far. And if you're waiting patiently for lower prices, then let's hope that the market gods are good to us. Is anybody short? Where's Zin at? Zin's probably short from like 21,000. 653. Oh, you are. Beautiful. Beautiful. That's even better than the entry, the sweet model entry. Legend. As he should. Legend. Where is he? Really? From here? You were just too good, man. Way too good. Does everybody understand why we're looking short, by the way, and not long? Even though we apparently failed from this? That's beautiful. That's beautiful. Right, so the anatomy of it is actually like you need something taken. That's pretty good. Your SNDR, the breaks, this is pivot special, so the fair value gap after breaking. That's a very high probability one. Then I'd be wrong. Then I'd be wrong, right? But what you're looking at is you're weighing the probabilities. Yeah, they were suggesting if this candle would have closed above, like in here. Right? Even then, like we took liquidity of this, but we didn't break structure on it. This actually wasn't part of any structure at all, which is why I'm kind of expecting this to not put in a valid low, given that it would have broken this higher time frame delivery. Right? So you got your drop into your pocket. Should this drive higher, you're now break even. Right? You got your institutional sponsorship here. We've now driven lower. Taking that liquidity. We want this to run. You might have to drop further into it, but we'll see. Yeah, that wasn't the 1 minute close that I wanted for sure after that run, but we'll see. We'll see, we'll see, we'll see. And if you're looking at the last area of interest, you've got this. Oops. You've got this. 35 half. You as well, Sean. Thanks for tuning in, my friend. She's slow. She's not doing exactly what I want, but she's slow. That's better. Let's go. See if we can close above that candle or not. If we can't, then we're probably looking at lower prices. I'm looking at this one here. So 12.5. The minimum that I look for is 20 points. The minimum. And I go break even after I take one off in there. Right, we get a close above here, then my stop goes underneath this candle at 603. Okay. Let's find out. Right, if you're growing your accounts, you might look at this being liquidity at 616.75. We've been one tick away from it. You ideally get a strong push out of it. Right, this is nice. You might expect a trade back into this now that we've closed above this candle. Let's go. Let's go. Right? Your stretch target is actually all the way up here at 67s. But you've got to break structure first. Your protected high is all the way up here at 56. That's quite a bit for the market to do. Quite a bit for the market to do. Not unheard of, for sure. But I think we get a reaction out of somewhere in here. Ideally, this consolidation. I don't... we have an imbalance here at 27.25. So we're not quite there yet. Here's lunch hour. Here's lunch hour. Let's go. Let's go. Ooh. That was violent. That was violent. Whoop. Showtime. What do we get? That was a closure underneath this candle. So ideally we don't tap back in and fail like it just did. Right? But if this cannot break this low, then we're really in the races, because this created a valid high that then cannot break a low, which is no bueno for the short side. I'm still involved. I actually didn't even get to, I wasn't quite at 20 points to be able to take it off, or take it off to go back break even. So we'll see what we end up having here. Anybody riding this with me, or are you guys just watching this deliver? That was a nice defense of this area though, so I'm break even now. Sitting on hands. All right. I'll take their covers for you in spirit, Bizram. Take all this Highland Run, please. Nothing underneath 705 for Burr. All right. All right. Let's go, let's go, let's go. Have ourselves a nice, good old-fashioned barbecue if we can get going above this. Right? High, not taking cool. We've been sweeping internally, yes, but well, even the 5-min, I suppose that's kind of ripe. Right? This is beautiful. That's beautiful. 22,800. All right. All right. All right. But even like, and let's not put this into the universe in fairness. But like even if this only works for 20 points, for whatever this ends up being, trades back up into here and then death. Inside of our confluence zone. Is that not much better than fighting all this? Maybe making some money in here, love it. You know, this chop. Some winners, some losers, some whatever. Ooh. I have a tell. Are we never able to play poker together? Is that what you're telling me? The real question is, am I always humming? Finally to the midpoint of the zone. What can I say? I love making the money. She's working all right. Right, so the next question is, whereabouts do you get involved if you haven't been? And that depends on what your risk tolerance is. If you're not involved yet, then essentially, are you scalping or are you looking to trade expecting this high to be taken? Which is fair. Right? Because if this trade's going to work out, we have to break structure. Is this lethargically moving up? You can make an argument that it is. We've now just traded into 35.50. Yeah, I love that idea. Love that idea. Right? I want to see a little bit more. We've kind of got these sideways failures. Right? Trading right into the midpoint of that zone. And down she goes. Now, the curious thing is that this candle closed above that high by a tick, making this a valid high now again. So we've got one second valid high. So our expectation is, at minimum, trade back into this. But in reality, making swings on this way up isn't what we want to see. I think we get a movement back down either to here, maybe taking this low. I want to see a little bit more violence out of this position. So if this imbalance fails, then I'm probably gone. Not yet. Not yet. We got to get going. Let's get going here. Last line of defense for the bears. I'm putting my stop underneath this candle now, the 634. It might tap into the imbalance and continue going. But that second swing there, not really what I wanted to see. Right? And that'll give me an opportunity to re-enter. If I get a valid short setup as well, something similar to this, then I'm probably gone for that third movement. Did that took you out? That did by a few ticks, eh? Okay, now stop 640.75. Nothing wrong at all with taking some profits into here and then watching how this is unfolding, right? So we got exactly what we want to. I think on the third one we get a little bit more violence, right? Well, it depends on what your targets are. If you're just looking for a win and you're expecting this to go lower, which is, you know, you got a pretty good reaction out of the midpoint here, right? You've got this swing, right? Now you've traded up. You're expecting to trade back into this swing. This is how you build a swing position, right? Yeah, that took me out underneath that candle there, speaking of. You're looking to trade back down into this, right? That actually didn't even deliver as low as it could have, right? And now you've got another swing in here. If it stops at 628.50, I just don't like how it's moving. So I think we go lower still before taking these highs. But regardless of that, you know, managing or whatever, if you're taking profits above and at key areas of interest, and you're able to do that consistently, that's perfect. Then what comes in is that you have your entry, what you want to see, right? You got your change in order flow. This was a good area to get involved if you weren't in aggressively like we were, right? And then we are monitoring what this movement's looking like, because we need to break structure to really fly. We have internal structure in an intermediate time frame downtrend. So like we're actually expecting, until this high breaks, we're expecting to go below this. In fact, we're expecting this to trade back in and then leave. It might not do it at the midpoint. It looks like it's respecting the pocket here. Right? But it becomes when to stay out of trouble, when to not hop in, what you're looking for to get involved here, both on an intermediate time frame, right, which is now sweeping on an intermediate time frame. What does our 15-minute candle look like? That looks pretty nice, doesn't it? Looks even better on the 5. All those IFVG lads piling in now. So this could grind up for lunch hour if they drop it down. Essentially, you're looking for something violent because this has been lethargic, which is internal, right? Then essentially what you're monitoring is, do they sweep in here or do they just take this, or what exactly do they do, right? Ideal situation is that this continues up for you guys that are still involved, breaking this high. You would then trade back in, ideally to an SMDR formed, if this is it. And then that movement would yield a very strong push up. I'm going to call the stream here, though, lads. Hopefully you guys banked a little bit here. And yeah, thanks for spending your Friday. Those of you guys in the group, we'll do a post-market of what we were looking for and how to get involved in this and what things we're looking for on a nuanced scale. We'll chat with you guys in a little while.